Hello there, thank you for joining me for another video. So in this video, you probably clicked on it because you want to know how to pay quarterly estimated taxes for your photography studio. So I have went ahead and put this spreadsheet together. Basically, it is a calculator that, if you enter everything correctly, you should get a rough estimate of how much you should pay for quarterly estimated taxes. So this is extremely important when you are running a photography studio because the tax man will come and we want to make sure that we pay all of our taxes just to manage cash flow, just so there are no surprises and you don't get hit with a large bill that you cannot afford. So anyways, if you would like this spreadsheet, there will be a link in the description below. Just go ahead and grab it. But hopefully it's pretty self-explanatory, but this video should hopefully clear up, let you know how to do it. I did provide all these instructions on what to do for each sheet, but hopefully everything makes sense. So basically the way it works is there's a few different tabs. You just fill these out, and then the quarterly estimated tax calculator will take all the information from these 4 tabs, and then it will spit out some numbers for you. So one thing I would like to highlight is this disclaimer over here. So this is not 100% accurate way to know how much you're gonna be paying in taxes. This is just a rough estimate, so you are somewhat in the ballpark. There are a lot of variables that go into paying taxes, which I laid out here in the disclaimer, such as your marital status, if you have dependents, your tax bracket for how much you make. There's just so many things that affect how much you owe in taxes. And so this is not a comprehensive tax planning spreadsheet. It's pretty much impossible to make one. But from my experience, the percentages I have provided in here get you in the ballpark, get you somewhat close. And even if you're off a little bit, if you make these payments, hopefully you're owing not that much come tax time. So without further ado, if we go to income and expenses, this is basically where we just enter your income expenses for each quarter. I would like to highlight that if you are, if you're an expert on quarters like January, March, April, May, June, these do not align up here. For example, quarter 2 is only April and May, and that is because the quarter 2 estimated tax payment for the IRS and typically states are due June 15th. So that's how they work. So pretty much fill out this section right here with all your income and expenses. You can fill it out however you like. I provided various income and expense accounts, so you know what to look for and stuff like that. Fill it out to the best of your ability. This is why it's really important to keep track of your income and expenses, have a good bookkeeping system in place. If you do have a good bookkeeping system in place, you could, literally just, fill this out in a couple of minutes. You can just grab it from your accounting software or your spreadsheet, throw it in here. If you want to save really time, if you just look at your bookkeeping profit and loss for quarter 1 and it says it's $10,000 profit after all your income expenses, you could just put $10,000 in here and not fill anything out, and then you'll see $10,000 profit down here, which will move over to the quarterly estimated tax calculator. So I will put in some just various numbers in here. So let's just say you had $5,000. Let's say it was a great month in Q3 and you had $20,000 or $20,000. And then we'll say, quarter 4, you're real 20, 1, 2, 3, and we'll say it was around $15,000. And then let's just say you put $1,000 for subscriptions, $2,500. Well, actually, let's just say subscriptions is a static, consistent number, just because it's pretty much a monthly subscription. Oops, 1, 2, 3. All right, and then we'll just say I'm just gonna throw some random numbers in here just to, show some examples. Not really gonna look at where they go. Okay. So you entered all of your income expenses. You will see that, you had a $500 loss in Q2. And then, your total profit for the year will be $29,500. So you enter all of your income expenses, then you come to the home office deduction. So this is very important. You can only claim the home office deduction if you have a space in your home used exclusively for business, meaning that if you are basically working from your couch in your living room, you cannot write that portion off. It needs to be a dedicated space. So it doesn't have to be a whole room. If you have a whole room, that is cool. Take the square footage of that room, but it can just be a desk in like your bedroom. So if you just have a desk in your bedroom, you just take the square footage, such as 3 feet by 4 feet. and then you just fill that out. So basically take the area used regularly and exclusively for business. These are just default numbers I put in here. It can be whatever you want. So we'll just say it's 200, and then your total area of your home is 1,500 square feet. That would mean the percentage of your home used for the home office deduction is 13.33%. And then from here, you just enter your expenses. If you own your home, just do the mortgage interest. Don't do the mortgage or the principal portion, because that is just a repayment of principal and is not a qualified business expense. Just do interest. There is another spot on this when you do your taxes, how you can claim the principal value of your home through depreciation, but that is not factored in the spreadsheet because, again, the spreadsheet is just a ballpark. It should get you pretty close. So, but if you're owning your home, just do the interest. If you're not owning your home, put your rent. So we'll say you're a renter and you pay, $1,800 a month. Well, we'll just say $1,800 for the quarter, just, for this scenario. And then let's just say you got insurance. We'll say $50. And then repairs, you didn't have any, but you had one right here. And then we'll just say you had 200 right there. And then utilities, we'll say it was like 350, 400, 450. And then it was really a lot in Q4. So there's that. And then for the mileage, this is, you just got to enter your business miles. So you don't have to update the mileage rate unless you are using the spreadsheet in 2026. At the time I'm filming this video, it is 2025. So if you are doing this in 2026, just look for the mileage rate for 2026. If you just go on Google, just Google, IRS mileage rate 2026 and you'll get it. But for 2025, it is 70 cents. And so we'll say you drove, 900 miles in Q1. 450 miles in Q2. We'll just say you drove 1,000 miles in Q3 and then 750 miles in Q4. Commuting is not a mileage deduction, meaning if you actually have a studio outside of your home, driving to that studio and back is not considered a mileage deduction. Basically, if you drive anywhere from like the studio to like a photography store to get some new gear, that would be a qualified deduction, but just driving to the studio itself is not a deduction. So. And then right here is where you enter your retirement. If you just have a 401k, a SEP, a simple or traditional, it will go on this line. Otherwise, if you have a Roth, it goes here. So just enter those. We'll just say you do $1,500 per quarter. And then that's pretty much all you got to do. Everything else will flow automatically. So we'll say for Q1, you had a profit of $6,076. In Q2, you had a loss. In Q3, you had a profit of $13,933, and then in Q4 you had $2,635. And then these right here are just rough numbers of how much you'd be owing. Self-employment tax is pretty straightforward. It's basically 15.3%. There are other factors that go into it, so it's not exactly 15.3%, but that's pretty much what it is. So that one's really easy to factor out. And then the income tax, this is the one where, again, it is really hard to estimate just because of all of the, all the variables such as dependents, marriage, other sources of income, things like that. But I had to go at 15%. I find generally 15 to 20% is on average the effective tax rate that people will pay. So if you are a higher income earner, you can edit the percentage right here. You might just want to change it to 20%. But 15% should be good to go. So for regular federal income tax, it is $597.26. And then Q3, it is $1,456, so on and so forth. And then these right here are your recommended, the recommended tax payment. So $1,800 for the IRS, and then state. The state is just like all the other ones. The state is all states are different, but generally around 4 to 5% is on average what I see that people got to pay. So I just did 4%, and then pretty straightforward. Q2 had a loss, so there's no taxes to pay, and then $3,800 for Q3 for the IRS, and then $400 for the state in Q3, and then so on and so forth. So these are the recommended amounts. I had it rounded to the nearest hundreds, just so we like big round numbers. And then if you would like to record your payments, you can do that here. So you can just say on 04/15/2025, it was Q1, type, we'll just say IRS, and then you can do the $1,800. That way you have records of it and you know exactly what it was. These are the due dates. So it's April 15th, June 15th, September 15th, and January 15th. And then how to pay your estimated taxes. I provided the links for all the places. So the IRS is at the top. So you pay your IRS right here. And then if you're in a state that has federal income tax, or not federal income tax, state income tax, you just go through one of these links and you can click on it. Yeah, it should take you right to your state's website of where you got to pay. Which leads me to another good point. The state quarterly estimated tax payments, not all states have income tax. So if you live in a state that doesn't have income tax, you can go ahead and ignore this. This is just for states that have it. All right, that is this is how you pretty much would use the quarterly estimated tax calculator for photographers. If you got any questions, please drop them in a comment below and I'd be happy to answer them. All right, you guys have a good one. Bye-bye.